Investing when stock prices are at all-time highs can be daunting, even for seasoned investors. However, Peter Lynch, the legendary mutual fund manager who led Fidelity Magellan to unparalleled success, offers a wealth of wisdom on navigating such challenging market conditions. Lynch's investment strategies are celebrated for their simplicity, practicality, and effectiveness. In this video, we'll explore how Peter Lynch advises investors to approach the market when stock prices are soaring, providing actionable insights to help you make informed decisions. Get ready to discover the secrets of investing smartly, even when the market seems overheated. Embrace the power of research. Peter Lynch is a strong advocate for thorough research and understanding the companies you invest in. He famously said, "Know what you own and know why you own it." When stock prices are at all-time highs, this principle becomes even more critical. It's essential to delve deep into the fundamentals of the companies you are considering. Look beyond the stock price and examine the company's earnings, growth prospects, competitive position, and management quality. Quote, "Know what you own and know why you own it." By conducting detailed research, you can identify whether the high stock price is justified by the company's performance and future potential. This approach helps you avoid getting swept up in market hype and ensures that your investments are based on solid information. Focus on companies with strong growth prospects. Lynch believes in investing in companies with robust growth potential. When stock prices are high, it's crucial to focus on businesses that have a clear path for future growth. These companies often have innovative products or services, expanding markets, or a strong competitive edge. During his time at Fidelity Magellan, Lynch often invested in companies that were small but had significant growth opportunities. He looked for businesses that were expanding their operations, entering new markets, or launching groundbreaking products. Even when the market is at its peak, there are always companies with untapped potential waiting to be discovered. Look for value in overlooked sectors. Another key aspect of Lynch's strategy is finding value in overlooked or underappreciated sectors. When the market is at an all-time high, certain sectors or industries might be undervalued due to temporary challenges or lack of investor interest. Lynch advises keeping an eye on these areas as they can offer attractive investment opportunities. For instance, during market highs, sectors like utilities or consumer staples might be overlooked in favor of more glamorous industries like tech or biotech. However, these stable sectors can provide steady returns and often become attractive when market conditions change. Quote, "The stock market really is the story of cycles and of the human behavior that is responsible for overreactions in both directions. Maintain a long-term perspective." Peter Lynch is a proponent of long-term investing. He emphasizes that market fluctuations are natural and short-term volatility should not deter investors from their long-term goals. Even when stock prices are high, a long-term perspective allows you to ride out market cycles and benefit from the compounding growth of your investments. Lynch's success with Fidelity Magellan was largely due to his ability to stay invested in quality companies over extended periods. He believed that time in the market was more important than timing the market. By focusing on the long-term potential of your investments, you can avoid the pitfalls of market timing and build substantial wealth. Diversify your portfolio. Diversification is another cornerstone of Lynch's investment philosophy. He advises spreading your investments across different sectors and industries to mitigate risk. When stock prices are at all-time highs, diversification becomes even more important as it protects your portfolio from the impact of a potential market correction. Quote, "In this business, if you're good, you're right 6 times out of 10. You're never going to be right 9 times out of 10. By diversifying, you ensure that your portfolio is not overly exposed to any single stock or sector, reducing the risk of significant losses. This strategy helps you weather market volatility and maintain a balanced portfolio. Stay calm and avoid panic selling. Market highs can often lead to anxiety and irrational decision-making. Lynch stresses the importance of staying calm and avoiding panic selling. Emotional reactions can lead to poor investment choices, such as selling quality stocks during temporary market dips. Lynch's advice is to stick to your investment plan and trust in your research. If you've invested in solid companies with strong fundamentals, there's no need to panic when the market fluctuates. Patience and discipline are key to successful investing, especially during volatile periods. Conclusion: investing when stock prices are at all-time highs requires a strategic approach grounded in research, long-term thinking, and diversification. Peter Lynch's investment strategies provide a robust framework for navigating these challenging market conditions. By focusing on companies with strong growth prospects, seeking value in overlooked sectors, and maintaining a diversified portfolio, you can make informed decisions and build lasting wealth. Peter Lynch's timeless wisdom reminds us that successful investing is not about reacting to market highs or lows, but about making informed, rational decisions based on thorough research and a long-term perspective. Embrace these principles, apply them to your investment strategy, and watch your financial future flourish. If you found this video helpful, please like and subscribe for more investing insights. Stay tuned for tips and strategies to achieve your financial goals, and check out our other videos on the channel. Thanks for watching. Raise your IQ with cutting-edge info, insights, and analysis. Visit and subscribe for free at the link below.